Hello everyone. In previous lectures, we have discussed about the deduction under section 30 and 31. And we have also discussed that in PGBP chapter, how income is calculated. So today I'm going to discuss with section number 35, that is expenditure on scientific research. Now to start with, it is generally bifurcated into two parts. One, if the assessee carries on the research himself, and second, if the research is being carried on by the outsiders. Now research can be carried out by the outsiders. It can also be in the form of donation given to other research houses. So it has certain points under it. So under if the research is being carried on by the assessee himself, so what deductions are allowed? One is revenue expenditure incurred by the assessee himself. If the assessee has incurred certain kind of revenue expenditure, then that expenditure is allowed as deduction. Second, if any capital expenditure is incurred by the assessee, then what are the conditions? And if expenditure is on in-house companies, then what are the conditions? Now, important thing to be noted here is that research here must relate to the business of what the assessee is doing. It should not be anything which is not related to the business. While talking of the research carried on by the outsiders, so it can be a contribution to an approved research association or any kind of university, college, or any other institution which is dealing in the research. Second, their contribution can be to laboratory, national laboratory, and third, contribution can be to an Indian company whose main objective is scientific research and development. Now, all these points are actually having certain conditions. So I'll start with point number A, that is if the research is carried on by the assessee himself, right? Now, the first point here was revenue expenditure incurred by the assessee himself. So I'm going to discuss that. So in case the assessee sets up a research laboratory of his own to carry on a research which may be useful in his business. So if the assessee is doing any kind of research which is related to the business, and while doing that research, the assessee has incurred certain kind of revenue expenditure. Now these expenditure can be in the form of when you purchase raw material or when you give salaries to the employees or the person who are engaged with the research. So these kind of revenue expenditure are actually allowed as deduction, which are allowed as deduction. Important thing to be noted is when we talk of salary here, it does not include the perquisites if the assessee is providing to such employee. So perquisites are not regarded as allowable expense. Okay. And if this expenditure is being incurred immediately preceding 3 years, the year in which the business is set up, so deduction is allowed as 100%. That means whatever amount the assessee has incurred in the revenue expenditure, that total amount will be allowed as deduction, right? Second is any kind of capital expenditure incurred by the assessee himself. So capital expenditure can be in the form of constructing a building in order to set up a research or the purchase of new plant and machinery. But exception is the cost of land will not be included as a part of deduction. That means if any expenditure is done to purchase a land, that expenditure will not be allowed as deduction, will not be allowed as to be treated as an expense. Okay. Again, if the expenditure is being incurred immediately preceding the 3 years of the commencement of business, that means the year in which the business is commenced, okay, preceding its 3 years, if this capital expenditure is being done, then again 100% of whatever expenditure is being incurred by the assessee with regard to capital expenditure will be allowed as deduction. Third is expenditure on in-house research to the company engaged in manufacturing. So this deduction is allowed only to the company assessees. Okay, and this deduction is given at the rate of 150%. That means whatever amount is being incurred as an expense, its 150% will be allowed as deduction. Now, second point was, till here we have discussed that if the assessee has done the expenditure himself, or if the SSC is incurring, doing the research himself. Here, if the SSC has given certain kind of contribution to the approved institutions, then what are the obligations or what are the conditions? So in case the research is being carried on by another agency, any college or any university, and to whom the SSC has actually given certain kind of contribution, that or the SSC has actually financed those researches. Okay, so if the contribution is given to approved association, it's then the amount of deduction given is 150%. If it is given to any approved college, university which is related to the research, then again 150% is allowed as deduction. And in case the SSC has contributed the money towards the research which is going to be carried out in the field of social sciences or statistical research, then 100% of whatever amount is given as contribution will be treated as expense or will be allowed as deduction. Another is contribution to national laboratory. So if any contribution is given to national laboratory, then 150% is allowed as deduction. That means whatever amount is given as contribution, its 150% can be allowed to be treated as expense. Fine. And the third point here was contribution to the company for scientific research. If in this field the contribution has been done, then deduction of 100% is allowed. Now this is the chart comprising of all the points which I have just explained. You can pause the video here and have a look at it, right? And this is again another chart. See here it is revenue expenditure incurred by the scientific research related to the SSA business, then 100% deduction is allowed. So all these points which I've just covered and its rates are given. So it is a concise form for you to remember, right? So what you can do, one trick you can use to remember this chart is just remember that what all are having 150%. So there are only three categories where the deduction allowed is 150%, another are all 100%, right? So you can specifically remember these categories where it is 150% and other automatically will be 100%. Now, apart from scientific research under Section 35, Section 35 does not only deals with the expenditure on scientific research, but there are certain other points also which are covered under Section 35. So these expenditure are what? Another expenditure is expenditure incurred on the acquisition of patent rights or copyrights. So if on acquiring patent right or copyright, certain kind of expenditure is being incurred, so that expenditure is allowed as deduction in 14 equal installments. Okay, and these installments will start from the previous year in which the payment was made. Right? Suppose in this very year, the payment is being made in order to acquire the patent right or the copyright. So from this year for coming 14 years, in equal installments, this will be allowed as deduction. Now, another section here, another point here under Section 35 is expenditure on know-how. Now, if any amount is spent on the expenditure of know-how, that amount is allowed as deduction in 6 equal installments. Okay, so likewise here we have done it for patents and copyright rights, it is for 14 equal installments, and for know-how it is in 6 equal installments. So it is deduction in 6 equal installments commencing from the previous year in which such consideration is paid. Supposingly in previous year 1920 or 1920 the payment has been made, and so starting from the previous year 1920 in 6 equal installments, it will be allowed as deduction. Another thing here is deduction in respect to capital expenditure incurred on setting up of a specified businesses under Section 35 AD. Now this Section 35 AD actually talks of certain specified business. Under those specified business, if the person is doing business under such a specified list, then this deduction is allowed. Now, there are certain conditions to be fulfilled in order to have deduction under Section 35 AD. So these conditions are that unit is set up in specified business. Specified business means the list I'm going to just talk about it. which all businesses are included there. So if the unit is set up in that specified business, and the unit should be a new one. If the unit is a newly set up unit, only then the deduction under section 35AD will be allowed, and the books of assessee should be audited. Now, which are these businesses which are specifically mentioned under section 35AD? First is, otherwise there are many, I have just written down here few businesses. So one is cold chain facility. Another is if you have warehouse facility for the storage of agricultural produce. Another is if you are building and operating hotel of 2-star or above category anywhere in India, then again any expenditure done will be allowed as deduction. Then if you are doing any expenditure for developing and building a housing project for slum area development or rehabilitation, again that will be allowed as deduction under section 35AD. These are specified business covered under section 35AD. Then if you are doing a production of fertilizer in India, or you are doing a business of beekeeping and production of honey and bee wax, or you are setting up and operating a warehouse facility for the storage of sugar. So these are the list of businesses which are specified under section 35AD, and conditions I've mentioned that these should be a newly set up business, and the business should be of this category only then deduction under section 35AD will be allowed. Now, what is the deduction allowed here? In case assessee sets up a new business unit, only then the deduction will be allowed. So deduction is what? Any capital expenditure done with regard to these specified businesses, then 100% of the amount will be allowed as deduction. That means whatever amount is being spent, that total amount will be allowed as deduction. Okay. Then there is another point here to be covered under section 35D. Which is amortization of preliminary expenses. Now, preliminary expenses, we all know that it is certain kind of expenditure being incurred before the incorporation of the company. So the company, the Income Tax Act also gives a certain benefit in order to write down these preliminary expenses as that means these expenses are allowed as deduction. Now, the condition is the eligible assessee. Who is the eligible assessee who can claim the deduction under section 35D? It is Indian company or non-corporate resident. Non-corporate resident means when we talk of person, so we have different definitions for person. One of the person is company. Another is which are other than the company and which are resident in India. Those persons will be allowed as deduction under section 35D for amortization of certain preliminary expenses. Okay. Now, when these expenditures should have been incurred? Now, these expenditures should have been incurred before the commencement of the business with regard to setting up of a new unit. Okay. Another is if you are doing an extension of the certain existing business, then again this amortization of preliminary expense can be this benefit can be taken. So eligible amount is 5% of cost of project. Whatever your cost of project is, its 5% amount is allowed as deduction. Now the way of claiming the deduction is that this amount will be claimed into 5 equal installments. Okay. So in 5 equal years, this deduction can be taken. So this was all with regard to section 35. Section 35 has points with regard to scientific research. Then section 35AD is special businesses, acquisition of technical know-how, acquisition of patents and copyrights. Then we have amortization of preliminary expenses. So this was all with regard to section 35. In the coming lectures, I'll discuss about section 36 and 37. Then I'll move forward to section number 32. Thank you.